Warren Buffett has sold 174.7 million shares of Bank of America, the second largest U.S. bank by assets, worth more than $7 billion since mid-July. He's sitting on a record amount of cash. That's right, Warren Buffett, one of the richest men in the world, is holding more cash than he ever has before. Although he's been slowly building up his cash since around 2001, his cash holdings have skyrocketed this year. In fact, he has more cash right now than Apple, Microsoft, and Nvidia combined, the three world's largest companies. Now, many people are wondering, why? Some see this as a red flag, thinking Buffett must know something that we don't. Maybe there's an economic storm on the horizon that only he can see. After all, he has been investing for over 70 years. So if anyone knows how to spot trouble, it's him. But officially, Buffett hasn't given any warnings of an impending doom. In fact, he's always downplayed predictions of market crashes. He's not the type to stir up fear in the market.
We only swing at pitches we like.
But if we look at his actions instead of his words, it seems like there's something more going on. He did something similar before the 2008 financial crisis as well. He'd been accumulating a cash pile in 2007, right before the crash, and when the market started to tank in 2009 and 2010, he swooped in to buy stocks at bargain prices. He did the same thing in 2021, when the market had just hit a peak. Just as things seemed too expensive, he stockpiled cash and later bought the dip. It makes you wonder, does Buffett know something the rest of us don't? Or is he just following a strategy that's been proven to work? Now, to be fair, Berkshire Hathaway's total assets have grown substantially over the years. So we can't just look at the cash pile alone in nominal terms. We need to see it as a percentage of the total assets, right? So as this chart shows, Buffett's holdings are approaching the same levels as they were right before the great financial crisis. But there's a key difference. Back in 2006, his cash pile peaked a bit early, and he started redeploying into the market before the peak. Still, Buffett has famously said he doesn't try to time the market. One of his most famous quotes is that the only value of stock forecasters is to make fortune tellers look good. So, what is he doing now? Why is he sitting on so much cash? At the core, Buffett is the king of value investing. He looks for undervalued companies to buy, and right now, he thinks things are way overvalued. If you look at something called the Buffett indicator, it shows that equities, or stocks, are at all-time highs. The Buffett indicator is a simple ratio of the stock market price divided by GDP, or the total value of goods and services produced by the economy. This indicator is useful because it shows if the stock market is growing faster than the underlying economy. When this happens, stocks are likely overpriced. Now, Buffett didn't come up with this strategy overnight. He learned it from his mentor, Benjamin Graham, who is often called the father of value investing. Graham's philosophy was simple: buy companies when they're undervalued and avoid them when they're overpriced. Now, Buffett has taken that principle and made it his own, waiting for the right moment to invest, even if that means sitting on cash for long periods of time. And guess what? Right now, the Buffett indicator shows that stocks are way above the historical average. According to Warren Buffett's own strategy, when prices are too high, it's time to hold cash. Buffett's philosophy, inherited from Graham, is that the stock market swings from being too expensive to too cheap. When prices are too cheap, Buffett buys. When prices are too expensive, he sells and holds cash until something more reasonable comes along. With stocks at all-time highs and cash returning around 5% in interest, Buffett is essentially saying, why take the risk? For him, it's a no-brainer to sit on cash until the next buying opportunity presents itself. Now, this isn't to say that a market crash is imminent, but Buffett is positioning himself to be ready when the time comes. His actions suggest that he's waiting for a moment when the market corrects itself. And when that happens, he'll be ready to pounce. So, what can we learn from this? What does this mean for you as someone looking to build wealth? Buffett's strategy teaches us a valuable lesson about patience and discipline. In a world where everyone's rushing to get rich quickly, Buffett shows us that sometimes waiting for the right opportunity is more powerful than chasing every trend. He doesn't panic when things are expensive, and he doesn't get greedy when things are cheap. Instead, he waits, sometimes for years, until the price is just right. And that's the lesson we can all apply, whether you're investing in stocks, saving money, or making any financial decision whatsoever. Sometimes the smartest move is to sit on the sidelines, hold your cash, and wait for the right opportunity to act. It's not about timing the market perfectly. It's about being prepared when the market gives you an opportunity. Buffett's record cash pile shows us that sometimes patience really does pay off. So, if you're ever feeling the pressure to invest in the hottest stocks, crypto, or jump into the latest financial trends, remember Warren Buffett. He's sitting on more cash than ever, and he's not in any rush to spend it. Thanks for watching. If you found this video helpful, don't forget to like, subscribe, and let me know in the comments. What's your take on Warren Buffett's strategy? Would you hold cash like him, or would you invest it right now? I'd love to hear your thoughts. Thank you.